And what that tells me is that Bitcoin is going to follow gold to Valhalla.
GM, good morning and welcome to the Milk Road Show, the daily crypto show where we try to predict the future using vibes, charts, and billionaires. I'm your host, LG Doucette, joined by my co-host and the taller and more handsomer version of me, Jay Hamilton. It is Thursday, October 23rd, but we did record this yesterday. Just a little caveat. Today, we are joined by Ryan Rasmussen, head of research at Bitwise, a leading crypto fund, and Matt Hougan, CIO at Bitwise. We're going to chat about why is gold outperforming Bitcoin so much, and will that continue after its red candle the other day? Why is Bitcoin flat when there's so much buying from ETFs and other corporations? These are two things in his fantastic memo that came out just a few days ago. And also, is Bitcoin going to have this breakout moment? And is that going to be next month, which is coming very soon? And if we have a little bit of time, we're going to chat some Polymarket and look ahead to 2026 and 2027, because we got to zoom out in weeks of chop like this. Before we start, in case you guys missed it, we actually just put out a really cool update to the Milk Road portfolio. If you're a Pro All Access member, you've been using this portfolio for a while. It's faster, smarter, way easier to navigate now. You can track the moves that our team has been making. You can interact with the charts. You can see basically everything that's going down. I think this update is awesome. So All Access members, go and check out that site right now. If you're not an All Access member, well, you're going to get a lot of FOMO because there's a full portfolio what the team is holding here. And that's something I think you want to be holding in the next couple of months. Today's episode is brought to you by Figure Markets. Grow your cash like a bank, no lockups, just real returns. And Gemini Credit Card, stack Bitcoin every time you swipe. No fees, no fluff, just crypto rewards. Gentlemen, let's get them in here. What is going on midweek? We talked about so much in the preamble that I don't even know where to start, but I'm just going to go right into, since I want to cover so much. Matt, let's just get right into your memo about gold versus Bitcoin. Give us a quick TLDR there on what's covered in your report.
Yeah, first of all, it's great to be here. This is always fun. I write this weekly memo called the CIO memo for Bitwise. I try to make it short, and there it is. The way I write it is I think about what I should write about. The obvious thing to write about this week was gold, and specifically why gold was going to the moon while Bitcoin was flat. It was all everyone could talk about. And so I started to research it, and unfortunately, it took me like 12 seconds to figure out the answer, which is the reason gold is skyrocketing, everyone says, Morgan Stanley says, JP Morgan says, everyone else says, is central bank buying. Central banks went from buying about 500 tons to 1,000 tons in 2022. And that persistent bid from central banks after the US seized Russia's assets has just transformed the asset and sent it up. And that was disappointing because if it takes me 12 seconds to answer my question, that's not much of a memo. But then what hit me is this central bank uptick actually happened 3 years ago. So if you look at the data, the buying went skyrocketed in 2022 when the US seized Russia's assets and central banks were like, we have to buy something else. And then it stayed flat from 2022 to 2023 to 2024 to 2025. But no one talking about the fact that central banks are driving the price up says that it's been happening for 4 years. And we've only gone rocket ship in the last 4 months. And then it clicked for me that the thing I should actually point out is that's what's happening in Bitcoin. Because the other thing people are worried about is ETFs have been buying 2, 3, 4x the net new supply of Bitcoin. Why hasn't the price gone to the moon? And the answer is it's just doing the same thing, which is when you have these big new buyers, they have to buy the asset from every short-term seller. And for gold, that took 4 years. For Bitcoin with ETFs, we're in year 2. And what that tells me is that Bitcoin is going to follow gold to Valhalla. It's just a matter of time. As long as we have ETF investors continuing to allocate, they will wear down the sellers eventually. And then there'll be headlines like, what's driving the price of Bitcoin to 500K? And the answer will be ETF purchases. But it will actually be a 4-year story, not what's happening right then.
Matt, are you worried about who are the sellers? Because I've read that it's Bitcoin OGs who hold like an enormous amount of supply. Is like, how long can that price suppression actually last?
Yeah, I think we'll see. I mean, I think that's a big part of it. Just like who are the sellers of gold? It's actually retail investors who own gold jewelry. That's like who's been selling gold into this share. They probably had it for 50 or 100 years in the family, and the price is up, so they're selling it. You see the lines of people selling it at stores. So it is existing holders. But I think the lesson from gold is just it'll exhaust. Like, it's not infinite. At some point, that supply constricts and the price goes up. Bitcoin's done pretty well since ETF launched, it's up about 160, 170%. But we haven't yet reached that exhaustion. So when will we? I don't know. But I do know it's coming, and that makes me want to buy every dip and hold forever.
So you're saying scrounge up all the gold in the house, engagement rings included, swap it for Bitcoin, and then just buy back later?
I think that's exactly right. I mean,
should we ask our wives about that first?
No, they can't listen. No, that's not.
No, I mean, but it's worth noting. The other obvious thing is gold is telling you that the store value market is bigger. Mm-hmm. If you continue to think Bitcoin will get a larger share of that market, that's bullish. When I started at Bitwise, if Bitcoin matched gold, it was getting to like 700,000. Now, if Bitcoin matches gold, it's getting to like 1.4 million, right? That's positive as well. So I see only good stories out of this gold bull run. I think we should all be happy about it and cheer the boomers and wait our turn.
If you look, I find this interesting too, and this is something like the gold Bitcoin trade is still like kind of like a relatively new concept to me. And even, I personally, being like a crypto degen kind of person, I find it funny to compare them because to me they're drastically different assets. But inevitably, everywhere you turn, that's what people are saying, and we're talking about how Bitcoin is going to drastically catch up to gold, and it's kind of lagging behind. I'm just pulling up for those that are viewing on YouTube. I'm just pulling up the I guess side-by-side kind of percentage gain here from the last couple of years, where Bitcoin is actually up dramatically, much more percentage-wise since kind of the doldrums of the bear versus gold. But naturally, people still comparing, saying that the gold money is going to trickle down into Bitcoin. Matt, the question for you that I have is, we're seeing the DATs, the ETFs, those, that's where Bitcoin is going. Are the banks buying that? Is this something the central banks would ever get into for Bitcoin? And have they already?
Well, so we know at Bitwise that they're studying it, right? Because we field phone calls from central banks, not every day. I don't want to overstate it, but we fielded a few this year. And I do suspect they will end up buying it. So yeah, that is painting a picture of our future. Look, Bitcoin is slowly marching up the institutional stack. If we were here 5 years ago, you'd be asking me like, will family offices buy Bitcoin? Now they're all buying Bitcoin, right? And there are a few endowments, and maybe there's one or two sovereign wealth funds, and then traditional central banks are zero. But we've been marching up this institutional stack for the last 10 years. I see no reason why we won't get all the way to the top, which is central banks buying it. I think it'll happen. It's just a matter of time for me.
Not fast enough. Not fast enough. That's what it is for everybody listening. It's not fast enough. Because you're right. It is a matter of time. But no matter what, in the in-between, especially at moments like this week right now, everyone's going to trip out and start to convince themselves otherwise because fear settles in, and fear is so strong.
It's so crazy. I mean, Bitcoin has outperformed gold over the last year, and we're all freaking out, right? I know it's underperformed year to date, but you just zoom out a little bit. But I agree, people freak out. That's your opportunity.
You guys have put out this fantastic report. I'm going to just segue into this, and Ryan, feel free to airdrop into this conversation here because I've just been grilling Matt with hard questions.
That's okay. I appreciate watching that. So I'm happy.
Let's just pull up this thing. So you guys put out your Q3 report. I think just came out yesterday or the day before. Taking a look through. This is a massive report, by the way. Anybody listening, it's 76 pages of fantastic charts and data, and a lot of kind of oversight over what these guys think is going to happen and the major catalysts to come and the big themes. But page 14, we've got the seasonality thing, right? And I see this every quarter, every month, especially in the fall. You see this on X of people being like, September is the worst month. October's coming. And now, but based on your research here, and we're looking, this goes back to 2010, right? Since the start of Bitcoin, November is the highest monthly performance for Bitcoin, 38.5%. The next closest is April, and then October after that. Is that going to happen this year?
It's a great question. And I actually love this chart because this is one of those instances where crypto markets aren't that different from equity markets, which investors are very familiar with. There's this saying in equity markets, sell in May and go away. And you can see here on the chart that if investors had done that, they had sold in May after the Bitcoin was up on average 23% every year in the month of May, and came back in September, bought the dip, they would have been extraordinarily well over that cycle. So far, it's seemingly working out that way as well. Price action has been positive so far since the end of Q3. And I do think that we're going to have a very strong Q4. Mainly, this is going to be led by two things. It's going to be continued easing of macro conditions. I think more interest rate cuts are coming. We're more likely to see lower rates than higher rates, which will be a positive tailwind for assets like Bitcoin and other risk assets. But then also you just have the seasonality impact no longer playing a role. Like if you think about who's buying the ETPs, it's financial advisors, institutional investors, and CIOs, and folks like Matt who go to Maine for the summer and are off on their boat and golfing and like not working. And and that's why the seasonality saying is true, is that you just have a low liquidity environment that leads to choppiness and you don't have as much interest. And at Bitwise, interfacing with financial advisors and wealth managers every single day, the amount of inbound requests we get starting at the very end of September is so noticeable, and it really does accelerate through the end of the year. And I think that's going to lead to more ETF flows. I think easing macro conditions are going to help as a tailwind, and anything on top of that will just continue to push us higher. So I'm very optimistic on October, November, and December of this year and into 2026.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Did you know you can earn Bitcoin without ever buying it? That's where the Gemini Credit Card comes in. Here's how it works. Earn up to 4% back in Bitcoin on gas, transit, and rideshare, 3% on dining, 2% on groceries, and 1% on everything else. Use it just like any other credit card. And you're building a crypto portfolio at the same time. The best part, the Gemini Credit Card has no annual fee and works anywhere MasterCard is accepted. When you're approved and spend $3,000 in the first 90 days, you'll get a $200 Bitcoin bonus. Spend as usual, earn Bitcoin instead at milkroad.com/Gemini.
Is there any truth, since you guys speak to these institutions, to this balancing of order books narrative I've seen a few times? Because I always see, if ever there's a dump of crypto in the last couple days of the month, I go on X and people are like, well, you know what it is. It's all those traders, they got to balance their books. And I'm like, I don't even know what you mean by that. Like, why would they just offload stuff to just make the P&L look better, cut the losses from the month? Can you guys speak to that a bit? Is that true? Are we going to see a balancing of books at the end of October, a pump? What happens there for institutions?
Go ahead.
I think there's a lot of like conspiracy theorizing that happens around market movements that can just be explained away around. There's a lot of interest and participants in the Bitcoin market, and that can lead to funkiness in price action. An additional element to that is that people who want to trade assets 24/7, 365 can't do that in traditional markets, can't do that with traditional assets, can't do that with things like hedge funds and other alts, but you can do that with Bitcoin and with crypto. And that just leads to some of these scenarios that I think people create conspiracy theories around. But ultimately, I think that natural forces are driving the market rather than, coordinated forces.
Yeah, I couldn't agree more. Everyone wants to believe in this great, hidden Oz controlling all sorts of markets, but all the explanations of it happen post fact. Very few will predict it, pre-event. And that's because it's mostly nonsense. Obviously, there are traders who need to match their option strategies against the physical, and that may impact books. There are traders who don't want to go into weekends long or short an asset. So you can see reversions, or you can see serial correlation if they want to position so they look like they were smart because they have their end of quarter reports. all of that happens on the margin, but it's not the tail wagging the dog, right? These are these are the imaginations of this magical Oz. They're traders. They have an impact, but they're not dictating what's going on in the market.
The degens need a story, man. We need a story to tell ourselves. At every 1K that Bitcoin moves, there's got to be a reason. There's got to be somebody pulling the strings.
It's totally right. Yeah. I mean, my wife comes in and asks me how it's going. I say it goes up and down, which I think is a detailed technical description of what happens.
The only two guarantees: the price will go up and the price will go down, without a doubt. But I don't know if I got a clear answer from you guys on the November thesis, right? Because that's everything in this report, everything from really intelligent people from like you guys points like Ryan. You're saying Q4 still super bullish. All our guys on the pro team, all our analysts, everybody feels the same way, and yet the sentiment doesn't feel that way. You guys, I don't want to talk about the sentiment because I think we just did that. People just kind of making up stories for slow price action or different price action. But is like a very clear question for you guys. Will Bitcoin reach an all-time high in November?
I'll go, Ryan. You're just waiting for me to jump in. I think it will. I think there's a chance it goes lower. I think there's a chance it wicks below 100K. I don't think that's impossible. You see Standard Chartered put out a note a day ago saying below 100K is inevitable. But I think the long-term thesis is still intact. I think crypto is not driving the bus. And I think that's why sort of crypto natives are so depressed, because they're depressed. There's been no real alt season. It's been sort of a disappointing cycle. They're used to the 4-year turning over right about now. But I think what they miss is that TradFi is driving the bus here. TradFi is the marginal buyer of the large cap crypto assets. And I think they're going to paint their portfolios into the end of the year to show that they have allocations to gold, to show that they have allocations to Bitcoin. And so we could well dip, but I do suspect we set a new all-time high before the end of the year.
Yeah, I would just second that. I think that we will set a new all-time high before the end of the year. November seems like a prime candidate for that. I think last time that we recorded, it was Friday of the flash crash, October 10th, and we recorded in the morning. So we had the initial statements, but we recorded hours before the chaos that ensued. And I think had that not happened, we would already be at new all-time highs. I think that was, of course, a minor setback, but that flushed a lot of leverage out of the system. Most institutional investors have no idea what even happened that Friday because they were more concerned with the statements that were being made and how markets were going to move and how futures opened over the weekend and what happened on Monday. So I think that ultimately that just reset the market and will allow us to push higher as more flows come in. And I also think that you have these uncertainty shocks from things that are tweeted out by Trump, and then they end up not being as big of a factor. And I think without those tweets, we would be at all-time highs. I think as we get desensitized to these types of events over and over again, and the recovery becomes quicker and quicker, that we're going to continue to push higher. And those forces that Matt mentioned, which is professional investors and institutions, are going to ultimately push us higher, and we're going to churn through all of that seller exhaustion that we ultimately will see.
I mean, I'll just point out that I agree with you guys, and I'm down with the all-time high this year, but the Trump tweets are the most unpredictable part of the whole market. So you never know. You just never know, right? Anything could happen from here. But I do want to ask you, in your Q3 report, you've got a lot of big catalysts coming up. One of which is the Clarity Act. Government's still shut down right now. I think I haven't checked the Polymarket odds, but they're not. I don't think they're great for. I think they're maybe end of October looking like that might end, but that's still just Polymarket. Ryan or Matt, how big of an impact would the Clarity Act passing have on crypto? And let's say the government reopens at the end of the month. How soon would something like that happen?
I think the long-term impact of the Clarity Act is tremendous and greatly mispriced by investors. I think that we have this regulatory flywheel that's already in motion. And it's easy to forget all of the regulatory advancements that we've made since the election last year, because there was a period where every single week some new regulatory or legislative win was up on the leaderboard. And you're like, oh, awesome, great. Oh, awesome, great. And you kind of got used to it. But if you think back at like the 10 biggest wins that we've had, they are massive, and the Clarity Act would be right up there with those wins. And so I think over the long term, this pushes crypto significantly higher. And I think short term, you'll have some price action, but I view the Clarity Act passing as more of a multi-year tailwind to crypto that continues to fuel this regulatory flywheel, which is certainly helping push markets higher. It's helping institutional investors come into the market and allocate to crypto. It's helping institutions and corporations come into the market and build crypto services, which drives investment in the space, which ultimately drives prices higher. So I think that it will have a major impact, but it'll be a longer term one than people are thinking, and people are mispricing it.
Yeah, I think that's right. For what it's worth, Polymarket is not optimistic. It thinks we're going to be shut down until at least like mid-November, if I'm looking at the right Polymarket. They're probably multiple, but the one I'm looking at puts a 50% plus odds on after November 12th, which is a while. It's crazy. It's such a commentary on what's going on now. My view of the Clarity Act is that the market has priced in it not happening. Mm-mm. And the reason for that is that you have the government shutdown and you have the Democrats pushing against the Republican version and a big conflict there. And I suspect there's a chance it won't happen. But I think if it does happen, it's a major positive catalyst. So I think it's important to think about where the market is versus the probability. If it truly fails, there's probably a little bit of downside. But if it does happen, I think it's a huge catalyst, particularly for ETH, Solana, on down, more so than Bitcoin. But generally speaking, it's one of the things that could drive us to new all-time highs.
It feels to me like people are also, you can get very focused on the legislation side and say, okay, we have two legislations. We have Genius Act passed, we have Clarity Act coming. And you think, okay, well, we might shoot 50%, which feels like crap, right? Okay, that's bad, right? That's, that is a very easy story to tell, but people aren't focusing enough on what's happened on the regulatory side. As a result of the Genius Act, we've had so many wins that you guys mentioned, and the report goes into detail on there's wins every week, every month there that like nobody reads those documents or really pays attention. And it's difficult to really feel the impact of that because that's also the impact is never felt immediately. But to me, you can't look past, the SEC crypto framework, all the things that have happened. Matt, you've been calling for ETP Palooza for a while as a result of everything that's happened with the SEC and the listing standards. And so it feels to me, even if we don't get Clarity Act, like that regulatory tailwind is still there.
Yeah, I agree with that. It's absolutely. Oh, go ahead, Ryan.
I was just going to say, there's a page in this report, it's page 72, which highlights just the regulatory developments in the U.S. only over Q3, right? So it's a 3-month period in the U.S. And yeah, thank you. You brought it up right there. Thank you. You have Project Crypto launched by the SEC, which was basically a roadmap by the highest ranks of the SEC on where markets are headed with tokenization and the integration of crypto into traditional financial markets, and a generational opportunity to improve the way that finance is conducted and investing is conducted in the United States. You had Trump signing the Genius Act. You had generic listing standards, which is going to lead to the ET Palooza that Matt mentioned. We had green lights on crypto staking, on spot trading from the CFTC. We had a fair banking order. We had a reverse on crypto 401ks by the Department of Labor and by Trump. Like, those are all individually huge developments and things that 2 years ago, everyone would have been doing like backflips and shooting confetti and cartwheels over if one of those happened over a given 12-month period. And yet all 7 of these happened in the last 3 months. And this ignores the things that happened in the 3 months preceding that and the 3 months preceding that. I think that's part of this flywheel that people are just getting wrong. And I think that the Clarity Act, going back to where we started on this, is going to be massive. It's going to be as massive, if not more, than Project Crypto and the Genius Act and other elements that we've seen fuel markets higher. And it gives comfortability to traditional investors that this is a market that's here to stay. It reduces risk of them allocating. It reduces, all kinds of other market risks for participants in the market. And I think that is a huge catalyst.
Okay, so you guys are saying that I shouldn't take this 19% chance on Polymarket of the Clarity Act being signed into law in 2025? Could it not? Could this not just double when the government shutdown ends, though, even like it doesn't have to resolve to 100%, but it could just go back up to 40 or 50%, right? That's all you need. That's what's the beauty of these prediction markets. You just need the trend to change a little bit. It was in July, it was at 87% on July 17th that this would pass in 2025. Now it's at 19.
Yeah. I would add there's been two things to do with the Trump administration that consistently have worked. And the first is to fade his tweets, right? Because it doesn't end up being as bad as the initial tweet happens. That's what happened a few Fridays ago. And the second is to count on them delivering on their core promises on crypto. They've actually done that pretty consistently. And so I suspect that 19% bid on Polymarket is a good bid to hit. Like, that's my guess. My guess is that will go up by the end of the year. I could be wrong, but I think my personal read of the probability there is that it's higher than 1 out of 5.
Matt with the rare short-term advice. Just kidding. It's not financial
advice.
Matt with the rare short-term, with the very rare short frame. Getting back into my degen head, I'm like, that's perfect. That's what I need. Gentlemen, I wanted to ask you, while we're still just talking larger trends, what's been the role of retail in this entire cycle? I feel like something that maybe we've covered on other shows, and I haven't seen too much of in your reports. Is retail here? Is it coming? Is it waiting for this legislation to go through? What's it doing in this cycle?
That's a great question. I think that some retail participants are here, and perhaps these days show up in things like ETF flows rather than Coinbase trading volume or Coinbase platform outages or something like that. But I do think that the retail participants are somewhat here. I fully also believe that retail frenzy has not arrived and is not even close. And that would just be based on my interactions day to day with people. I haven't really been receiving those text messages that I'm sure we all get since Bitcoin was, clearing 75K and going towards 80K. Like, that was the last time that I really saw a bunch of people being like, once it drops below 70, I'm buying. And, what should I buy XRP or should I buy Cardano? Like, I haven't gotten those text messages since maybe January, which is really surprising to me given where markets have gone. And I think perhaps that's a sign that there's just fewer retail participants right now than there will be later in this cycle. And that will certainly help fuel the rally if they do come. But I agree with what Matt's been saying, which is that this is an institution driven market. And I think that's why we'll have less of those boom bust cycles going forward, is because institutions are much larger participants today than they were before, and they're ultimately long-term holders for the most part.
Yeah,
this chart.
I mean, you got to
go ahead, Matt.
I was just going to add on the retail stuff. I think they got double crushed. They got crushed by FTX, and they got crushed by the meme coin collapse. And maybe they just folded it in after Melania coin jumped.
And NFTs. Don't forget NFTs. NFTs are a big one.
And NFTs. I mean, that's 3 strikes. You can only get wrecked so many times before you fold up your tent. I think the retail that's been here is TradFi retail, right? The retail that's been here has been in ETFs. The retail that's been here has been in MicroStrategy and other DATs. I think it's been a different retail. I do think that retail demand is robust and continuing. But I think crypto native retail just got, as you said, or as we just covered, triple wrecked by FTX, meme coins, and NFTs, and maybe just isn't that robust in this cycle. But that doesn't mean retail's not here. It's just a different retail.
I would agree there. I think the definition of retail has just changed dramatically. It's not like people don't know what Bitcoin is. I think last cycle people were like, okay, I'm finally getting into this, and people had a lot of boredom then too, as pandemic, and we've told that story 1,000 times. But I think this time it's not. You don't have people being like, well, maybe it is finally time for me to buy Bitcoin. I think they've made that decision or wrestled with it a few times in the last couple of years since that last cycle. But I would say that today I did see a catalyst for retail returning, and it is the Beyond Meat short squeeze in the stock market that's happening. If you guys have followed that, they're calling it GME 2.0, as a lot of short sellers, including Martin Shkreli, is getting squeezed out of his Beyond Meat short. As just, hey, who knows? Jay is laughing, but this is I'll say, when I see something all over Reddit, that's when I know that there's going to be retail interest in something. That's when I know I'm going to get texts about it a couple days later. So I'm just going to point that out. Anyways,
that is so true. Matt and I, for what it's worth, were just talking about this Beyond Meat thing like an hour ago. So
doesn't have a Polymarket for Beyond Meat. We could check that in a minute. But I want to wrap up this just this retail conversation in Bitcoin. We have this other chart in your report, page 18. Bitcoin ownership by type still shows 66% as individuals, followed by 7.8% of funds, ETPs, and businesses at 6.6%, 7.6% estimated loss. So those are the ledgers and the landfills that have like 2,000 BTC on each one that'll never be found again, I'm assuming. So to you guys, is this 66% individuals? What is that? Is that a mix of retail? Are those OGs? Who are those people?
Yeah, both. I think, of course, large OG holders are going to start making up a larger percentage of this number, certainly. But it's retail investors for the most part. We actually get this data from River, who does a really great job of exhaustively examining different addresses and ownerships and clusters to pull this data together. And it's definitely retail investors for the most part. One thing that sticks out to me about this graphic here is that I went back and looked at what this breakdown was a year ago. And the biggest jump that I can see here is in funds and ETPs, which was 5.2% and is now 7.8%. So it's something like a 50% increase from where it was a year ago. And I think that speaks to the institutional driven market nature of where we are at today, what's driven the market for the past year, and where we're headed over the next couple of years.
Awesome. Thank you for explaining that. All right, go ahead, Jay.
You got to go to the next slide quickly, because there's just the story of supply versus demand with Bitcoin. And even actually, we should look at the Ethereum slide too, which is a few lower. And this is why it goes back to your memo, Matt, of what the heck, why is the price not going up if this story, but just walk us through the supply versus demand on Bitcoin. Let's talk Bitcoin first and then Ethereum.
Yeah, sure. I mean, so what we look at here is the most basic drivers of Bitcoin's price, which is you have the new supply issued every year from the blockchain. It's 164,000 Bitcoin per year. And you can see it from the time ETF launched to the time we wrap this report on the right. And then you have the number of Bitcoin being purchased by public companies and spot ETFs who have been the marginal buyers of Bitcoin. This is why I said that this is not a crypto native driven market right now, that other entities are involved. And as CIO, I can tell you the complex math says that the numbers on the left are bigger than the numbers on the right. And that's why the price of Bitcoin went up. And the point I was making in the memo is this will persist. ETF purchases are going to scale over time. Every ETF in history scales over time. So we're going to have this persistent supply-demand imbalance in Bitcoin. That means that existing holders have to sell to make those two columns the same. And they'll only do that if the price goes up. And eventually those sellers will be unwilling to, and I think the price will skyrocket. Another way to conceptualize what's going to happen, if you go back to that last chart, that in every other asset, the columns on the right are bigger than the ones on the left. So in stocks, that's like, 60, 40, 75, 25. In bonds, it's like 90, 10, right? So eventually those things on the right have to take over from the things on the left. And I think the price will go up substantially as they do that. And then on the ETH slide, the story is actually even more pronounced on ETH. I know the issuance of ETH is a little bit different, but if you look here, 1 million new ETH, 8 million purchases by spot ETFs and public companies. Again, these may be the only slides you need to look at to understand the long-term outlook for Bitcoin and Ethereum.
Yeah, just to put that into perspective, there's been something like 7 times the new supply of Ethereum being bought by corporations and ETPs since the Ethereum ETFs launched. And for Bitcoin, that number is closer to 4x. And so that there's no surprise, particularly because the ETF flows for Ethereum and corporate purchases happened in Q2 and Q3 of this year. There's no surprise that Ethereum outperformed Bitcoin in Q3. When you just think about it from a demand versus supply perspective for both of these assets, of course, there's other market forces, but when you just think about those things, it really comes down to simple economics of what drove the prices higher and why Ethereum outperformed Bitcoin in Q3.
Sometimes it's so obvious. The complex math is so obvious, Matt. Thank you for being the CIO and joining us today to break this complex math down for us.
That's our quant.
Guys, listen. I hate to rain on this like smart big brain zoom out party, but we need to have a little bit of fun, and we promised we would talk about Polymarket. Okay, so and I want to hear about, you guys had some kind of bet or like some kind of battle about Polymarket a year ago. I want to know what that was and who won the argument in the end.
Yeah, I will walk into the public circle of shame with this one because I felt very strongly that post the election, Polymarket volumes and open interest were going to fall off a cliff and just continue to be there until the next election cycle. The reason I thought that was because sports were somewhat of a big piece of the volume and the open interest back in Q3 and Q4 of last year, but it was predominantly politics, particularly in Q1, Q2, Q3, and then of course some in Q4. And I just felt very strongly that was the case. And Matt and I were debating this. And I actually, as we crafted our 2025 predictions, I wanted to make that prediction publicly that Polymarket was not doomed, because I think Polymarket's an amazing product. Will be here for many, many decades to come and will continue to grow in usage. But that we were going to see a big drop in usage post-election cycle. And Matt took the other side of that argument and thought I was wrong. And I, of course, was incorrect. We've seen a lot. I'll say it louder for those that didn't hear me. Throw my hands up. I was wrong. Matt was right. Volume has maintained. It's continually, it fell, of course, a little bit, but it's continued to grow actually in 2025, quarter over quarter. Open interest remains at decent levels across all of the markets. Sports is becoming an increasing piece of Polymarket's volume in OI, which I think is very, very fascinating. Of course, not super surprising when you think about how big sports betting's become. But you also have other big markets in Polymarket in Q3 in terms of volume were around Fed interest rate changes in September and July, and then a few around Bitcoin price targets, which are kind of like call options, but priced using prediction markets, which I think is interesting. I don't know, Matt, is there any gloating that you want to do on this topic beyond that?
No, that sounds right. I mean, I make about 90% of my income from Bitwise and 10% from winning bets with Ryan. So that's the home economics here. Look, I mean, I think Polymarket is obviously here to stay. It's going to be giant. I still think it's probably a bigger deal than most people give it credit for. And it's been wonderful to see.
Let me ask you guys a question. How do you invest in prediction markets? Because I think we all agree in this statement, right? Prediction markets are here to stay and they're going to be big. How do you invest in them though?
It's a great question. I mean, Robinhood has prediction markets. I don't think that's exactly what I think they call them event markets perhaps, but Robinhood is a publicly traded company. They have this small part of what they do, but they're obviously trying to get into the game. You also have the infrastructure layer for prediction markets. So if you think about where value will accrue for some of these crypto use cases, and if you think about prediction markets being one of the most successful crypto use cases, naturally the two places value could accrue are the underlying blockchain for which these bets or prediction markets settle, which of course is Polygon, and then by way Ethereum. And then you also have perhaps the information providers, and Chainlink and UMA are two of the information providers to Polymarket, right? Because if you want to know who's going to win the World Series or who wins the World Series, you need some piece of technology to relay that information back to Polymarket. And of course, that is the Oracle network that's doing that, or the information provider. So I think there's different ways to get exposure to the growth of Polymarket. There may even be a Polymarket about Polymarket. I mean, I'm not sure.
I think that's right. I really like the Chainlink example. I think the mistake people make when they look at something like Polymarket is thinking it could be 5 times as big. I think it probably could be 1,000 times as big. Right. I think that's the scale you're talking about. I think you could find retail investors allocating as much to Polymarket as they do to traditional stocks and bonds. I think you could see it tackle huge chunks of the options infrastructure and the futures infrastructure. There's no guarantee it will do that, but I think it could do those things. And so infrastructure plays like Chainlink, if they have 1,000x increase in demand, I think that's where it gets interesting. I liked Robinhood. That was another good idea, Rob.
I'll just add that there's also the native tokens of these platforms that they've relaunched them as well. That's the big rumor that Polymarket and Kalshi are racing towards the TGE with their massive raises lately. So that's also, I'll just add that that's something I personally have my eye on, and also a big driver of me wanting to participate in prediction markets. And we're going airdrop stuff. We're going degen stuff, Ryan and I right now, but we're talking more that side.
What a shame for U.S. users who were restricted from using Polymarket for so long, right?
Mm-hmm.
Yeah,
terrible. Yeah. I just checked to see if I can use it, and I get a message that says you appear to be located in the U.S. and I'm not available to use it. So, let's
look at some of the more. You can come through our side and we'll show you some of the markets. And to wrap out the episode, I want to know what you guys are picking in a few markets that I have chosen. All right, so here we go. Presidential election winner 2028. Leading candidate is JD Vance at 29%, Gavin Newsom 23%, AOC at 9%, Dwayne "The Rock" Johnson 4%, Ivanka Trump 2%, Kamala Harris 2%, Tucker Carlson 2%. The 2 and 1% are hilarious. These are Elon is in there.
LeBron James.
LeBron 1%, man. $15 million of volume on the LeBron 1%.
This is incredible.
Wow.
Kim Kardashian, and they used her break the internet picture as the icon for that one.
Incredible.
Wait, before you guys say though, LG, you got to explain your take on that. You don't need the bet to go to 100%. You do not. That's what people are doing here, right? They're not betting on LeBron James actually winning president. They're betting on the fact that the public could think that it's more likely than it is right now because some tweet that he does or something happens in social media that leads sentiment to change very quickly, which we keep seeing this occurring more and more often.
That's right. So that's my conservative and more the kind of secret of these markets to me is that these outcomes trade like stock, right? So there's equal sides almost to a yes and a no equation, and as a result, all you would need for to make profit on, say, like The Rock in this outcome is like you don't need him to win in 2028. You don't need to wait 3 or 4 years for that to happen. All you need is for that percentage to go from 4%, which you can buy it at, so it's cost 4 cents to buy the yes. You just need that. If it goes to 8, you've doubled your money. You've doubled the value of your share of yes. So all you need is The Rock to tweet, "I'd like to be president one day," and that'll go to 20%. Just on the FOMO of people buying that, and then you can just sell. You can set limit orders on this, so you can just set that a limit at 8 or 12 or 16%. You don't need it to resolve. So that to me is how you actually can make money on these, as opposed to sports betting. Although some sports bet sites will give you allow you to cash out your bet as that outcome gets more likely at like a discount for them. But in this case, you don't need that, right? It's not an all or nothing outcome. So that's all I'm just going to point out is that's how I like to play them. Anyways, gentlemen, presidential election winner 2028. Which of these is the right buy or the good buy? And you can buy multiple, right? Again, you can buy each one and just wait a couple years.
Let's hear it, Ryan. I got my picks, but you go first. If you say Kim, that may be I may lose it.
Look, I am a reality TV fan. I do keep up, and I also love Jumanji and The Rock. So I'm torn, but I guess we'll be back here in 4 years or 3 years, and I think it'll be JD Vance. I know that aligns with this market here, but I actually think it'll be JD Vance, and my backup call would be Pete.
Wow. I would take the other side of those trades. So we have a liquid market on both of those, Ryan. We can go to town. I think there's value in the outliers here. So I would take Josh Shapiro at 2%. I would take anyone with the last name Trump at 2 or 3%. Both Ivanka and Donald Jr.
Yeah,
those seem undervalued. And then on the Democratic side, I think Shapiro. And then maybe like a Youngkin or something. I would fade the leaders in this market. I don't think either of those are gonna be it.
Okay, I like that. Those are good.
And why not? 4 cents on the rock. Why not? Come
right.
on.
Yeah, come on.
Come on.
Oh, that's great. Okay, well, we're going to rifle through the other ones so we can wrap out. Highest grossing movie 2025, mainly because we talked about this. The current leader is Wicked for Good at 41%. Anybody who has children will know why Zootopia and Minecraft movie are up there. And Avatar 3, which has not been released, is the only other serious one at 7%. Guys, what's it going to be? Highest grossing film?
I think there's 59 free cents on Wicked for Good. That seems like an easy one for me.
I agree. You got a Thanksgiving opening weekend for a sequel or part 2 of what was likely, I imagine, the highest grossing movie last year. It seems given.
Yeah, that might be the best trade in finance right now.
That's a 2.5x by the end of year, right? That's all you need, right? It's at 41% that you're cashing out at 100, right? So you're making 2.5 times your money. Can't do that. You probably can't do that on Bitcoin this year.
250.
Yeah, that's it. Yeah, that's what you would need. Yeah. I need a Polymarket for that. Yeah, what's gonna happen first? Wicked, highest grossing film, or Bitcoin 250 by end of year?
I can't wait to clip Matt saying that might be the best trade in finance right now, and for people to have to listen to this entire episode to find out that he
they gotta wait 45 minutes.
Wicked.
That's right.
Okay, a couple last ones.
We'll send it to our compliance team just to mess with them.
Yes.
Okay, ETFs launching in 2025. I noticed in the Q3 report, you guys have Litecoin and Cardano in there as Bitwise like investment 10s or 30s as part of the portfolio. But the Pepe ETF in 2025, 7% chance. Any chance that goes higher for the Pepe coin?
Yeah. Speaking of compliance, can't speak to any active filing that we have. But
we do not have an active Pepe filing. But
we do not have an active Pepe filing, and I think that this one's going to 0. I would be shocked to see. First of all, for any ETP to launch, the government has to reopen. So you could parlay this with the government opening market and see then you start to really, have some nice odds in your favor.
Awesome.
It's hard to do better than a Pepe parlay. I'm not going to try to come in over Ryan on
Pepe, Ivanka, Wicked parlay.
There you
paying
go.
out 100-to-1 ratio.
Then you have to wait 4 years for
you
get
out. The first 2 at the end of the year, but then you got to wait 3 years. Got to hope the Rock or Ivanka just locks in there. Joe, this has been awesome.
LG, I love that we shut down the DGen podcast, which I don't know if you guys know, but LG was running a DGen podcast twice a week, and we brought him over to this show, and that's why he's more involved with this show. And now all of a sudden, this show is turning into the DGen show, and I just love it. It's so fun.
We talked so much smart gold stuff. We talked about bills passing in Congress, Jay. How could you accuse this of being DJ? listen, the 1000x could be a Polymarket, right? Matt, you said that this could grow so much. Yeah. So who knows? For all we know, in 2 years, every finance podcast will be about prediction markets. That's for all we know. That's what's going to happen, right?
Sure.
Could be Pepe's all the way down for sure.
All right, guys, you heard it here first. Wait, what was it? What was the best? Oh yeah, Wicked for Good is the best trade possible right now. Gentlemen, thank you so much for coming back on the show. We'll talk again very soon, and excited for that next episode. We'll see where we're at in the market. You guys and anybody who's still listening, pro members, go check out that new portfolio. Non-pro members, go try and look at it, have some FOMO. It's really worth a lot. And gentlemen, we'll talk to you again very soon.
On-chain betting only lets you bet on one event. Boring. SXBet changes that. Parlay bets, boost payouts, no fees, straight from your wallet. Go to sx.bet now to get your slice of the $50,000 parlay launch tournament. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.